All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. We have a signal on the board here this afternoon, and it's Halliburton, and it's bullish. And it's very much like Coke yesterday and Alcoa the other day. Halliburton has earnings on Monday morning, so there's no time for me to get into the position and play it unless I want to take the earnings risk, which we've talked about. But you see, if we go and take a look at things like Alcoa. The earnings nicely to the upside here. Coca-Cola, same thing, nicely popped to the upside here. Halliburton, I would expect to go to the upside at about a 60% clip. When we look at the challenge algorithm and it picking winners for earnings, that's the clip that it runs on. Now, if you break it down to significance, right, meaning making a move that's big enough to pay off the option, now we're down to about a 40% clip. If we're just talking about a directional move, well, yeah, we're talking about a 60% clip, but a directional move that's great enough to keep the option green, that's a different matter. It's a different matter to see a move that's great enough to really move the option in a significant way. And it's one of the reasons I won't take the earnings risk until the challenge is up over 10K. And so, not going to go out and trade Halliburton here on the bullish signal. We did see Schlumberger earnings here this morning. I'm not sure there's anything too great about them. I don't think there's anything story changing for them or something where you go, wow, okay, this industry is making a turnaround. In fact, I think all the opposite. I think it's one where you just look at it and you go, the energy sector is what the energy sector has been and could desperately use some real economic growth around the world, which it just simply doesn't have. If you take a look at Schlumberger's earnings and how they've been falling off month over month, here on Estimize, I'll pull it up, but 78% growth, 52% growth, 23% growth, 10% growth, right? And they've moved into a contraction, minus 25, minus 21, minus 19. But here's the thing about Schlumberger, and while there's not a lot of positive to talk about when it comes to the stock and everything else, it is looking like it's ready to move into a very easy comparable situation. And what do I mean by that? Well, Starbucks. Starbucks was a victim of its own success for a long time, right? In fact, if we pulled it up, and we talked about many times on video here, but if we pull up Starbucks on a monthly basis here, Starbucks made this really nice move 2013, 2014. And the numbers were good in 2015. They were really good. 2016, they were good. 2017, they were good. In fact, the numbers during this time were better than the numbers during the uptick. But what happened? When you compared them to the prior year and the growth rate to the prior year, they weren't as good. Yeah, the real growth was better, but the actual growth rate had been falling. It was very tough to keep up this pace, to keep up that comparable, to say, well, compared to last year, we did really well. And investors like that. Investors like to hear, compared to last year, we did really well. When you compare their performance to last year and they don't do as well, investors fear that. And so Starbucks went through a long-term consolidation as the comparables were very difficult. And yes, Starbucks' earnings have been good for the last year, but they haven't had such difficult comparables to go off of. Well, Schlumberger has been in a situation where their comparables have been tough, right? Yeah, the industry has dropped and everything else, but their comparables have been very difficult as well. And you can see how the stock has really fallen off over the past few years and fallen off in a big way. Even when it did have that earnings growth, you could see on the horizon that, okay, you know what? They're not able to keep that. The comparables, they just get worse. But now, they don't have such high numbers to compare to. Their numbers have been lower, and so the comparables are easier. And even down here from a visual standpoint, you can kind of see how the earnings expectations are going forward. Yeah, it's for some actual growth again. If we look at it from the revenue side, we're seeing the same thing start to come in. Here's Schlumberger on the revenue side: 15% growth, 14%, 11%, 8%, 0, 0, 0, 0. But when you look at their projections going forward, even with oil prices at these levels, we're probably talking about revenue growth coming into play, which is very interesting. And, one of those things I'm going to take a closer look at here this weekend. Personally very interested. I would love to be involved in some oil plays, from an investment standpoint, just given the fact that the energy space is very unloved, these days. There's not a lot of love out there, and for good reason, but at some point, are all those reasons priced in? And at some point, are we looking at some very easy comparables that give the stock a chance? And so, Schlumberger earnings, I know Schlumberger, Halliburton, they trade about the same. I'm very interested to see Halliburton earnings on Monday, to see if we're going to be kind of seeing that same thing with Halliburton. But you can see Halliburton here. For 4,100% earnings growth, right? And Halliburton could do that just because of where their comparables are if they've had, negative earnings growth. But you can see it's been negative 23%, negative 44%, negative 40% earnings growth is what is expected this quarter. If we look at the revenue side, right, you can see 42% growth, 48% growth, 34, 24, 13, 0, 0, minus 4, right? Next quarter, it's projected minus 5. It's one of those where, they're still in that negative erosion. And, do we see the same thing, here out of Halliburton that we kind of starting to see out of Schlumberger, where we could be talking about easier comparables? I think that is traditionally, when we see that, it's a very bullish case, and it tends to be a very bullish case in a period where pretty much everything you read about the stocks is pretty negative, and then the stock just starts to go. It just starts to go. No real big reason why. No real big news events or anything like that. And so, you've heard me talking bearish Halliburton, Schlumberger for a while. Both are, decently shorted, but not aggressively. Schlumberger is 1.7% short. Halliburton's 4% short. And look, I don't expect these stocks to return even to where they were earlier this year. Halliburton back to 30, that's going to take a lot for it to get there. Halliburton back to 25, maybe, right? That may be best case scenario. So, going to be looking at that here, this weekend. But I do think there are some signs, and I'd like to see it not just out of Schlumberger, but out of other companies in the industry. And, as it sits so far, we still see a lot of bloodletting in the industry. EOG Resources really, continuing to struggle. Apache Energy, the stock's in the 20s. Some of these stocks just have really, been hit hard, and for good reason, right? It's not like there's a, oh, well, this doesn't make any sense type of thing. No, they're for good reason. But do we start to see a little bit of turnaround in the comparables? I think that is one of the best case scenarios here for them. And it is one of those where if they do get oil to rally, and they have improving comparables, we're talking about an industry that, you could argue is 20 to 30% undervalued. But a lot has to happen for that, undervaluation to get, snap back up. For now, path of least resistance, is still lower, unless we see a few of those changes. Okay. Now, crossovers, so that's the only signal on the board. Halliburton, I know I went on about that, but not going to play it. We do have a bunch of downside crossovers and upside crossovers. I thought Delta had a good chance of triggering bullish here today, but the consolidation risk on it, just the component's too high with it where it is on the chart. But It's a pretty easy trade setup. They've already had earnings, so you really don't have to worry about that. They gapped down on earnings. They've really rallied since, but a stop on today's low, gives about 80 cents risk, and just in a really interesting spot there, for Delta Airlines. I haven't decided if I'm going to go pick up a little bit here before the close, just personally, but very interesting, very nice setup, for kind of what I'd like to see. On the downside, we had Micron, and Micron here dropped, broke the 7-day moving average. You heard me talk about it earlier this week. This could trigger. I'm surprised not to see it trigger here today. Does it have to do with option expiration or any of those factors? Not really. When I look at it, it just the follow through component on it is very light. Which I was kind of surprised to see. And, so basically the algorithm saying, hey, look, yes, we have all the trigger action, but the odds of moving two average true ranges to the downside is very slim off of this level. And so, not getting the signal there, but does have, all the technical basis here. For it. All right. If I pull up the scans, you can see, some of the other crossovers. There's quite a few, and two of them on here. Johnson and Johnson, Boeing's not on here, but Johnson and Johnson news here today, driving it lower and really taking the market with it. Right. We have Boeing, which had same thing, news and taking the market with it. We talked about, or I mentioned this morning in my note that, hey, it's option expiration. Unless we get a news event, things aren't really going to move. Well, we got a news event, and it created some change. It created some catalyst. And when we get those events like Boeing and like J&J that are so, look, I mean, these are Dow components, and they affect the Dow, and it's going to affect money in other areas as well. When we get that, the pin pressures, they go away. They go away very quickly, because they are, yes, do they affect things? Sure. But they are low there on the totem pole as far as, the really big factors, that will drive stocks. Here with it. I was asked earlier today if I trade any of the option expiration and the pinning and stuff like that. And if you go into the library search and type pinning, there's a lot of discussions about it. But no, I don't really trade pin action very much, and for good reason. There's typically not a trade. It is one of those where you get to it, you see, okay, chances are decent it's going to pin, and you know what? The market makers know it, and they price the options accordingly, and so you really don't have a great way to play that unless you're going to play the stock. And, even then, right, fundamental factors, technical factors, news factors, they all will outweigh the pin factor. So I just understand it as a risk factor out there, but I don't use it as a decision maker, here for things. Okay. So anyway, that is that there. With the pinning. Now, as we go into next week, a lot of earnings on deck. We got a little bit of a picture of it here, but you can see even the bullish percent index today moving on up with the market down, which we haven't seen for a while, but a very good sign. And take a look at today on the minute chart of S&P futures. We had this 1 minute right here, just after 10 o'clock my time, which is Mountain Time, where we had the 20K volume, that bottoming volume right there, and we've seen the market springboard off of that. And while that level doesn't matter going into next week, it is nice to see at least from more of a bullish standpoint that, hey, you know what, we do get some bottoming volume come into the market. We haven't seen that for a while, so it'll be very interested to see how things are set up. But bottom line, next direction of the market's going to be determined by tech and by tech earnings. And, when we look at this week and what has happened in tech, banks have gotten a lot of certainty, right, with the earnings and with what's going to happen with earnings going forward. When we look at tech has created a lot more uncertainty, and we've seen it here this week. Adobe, with some of the earnings downgrades or fears that, they're their 2020 numbers aren't going to be that good. We saw 2 upgrades on Microsoft today, even and their stock just kind of sold off heavily through them. It subsequently has bounced back just a little bit, but there's a lot of fears about tech. And let's face it, Netflix is not tech. Netflix is its own thing there. The fears of tech are real. If those fears start to get alleviated with some of the earnings, then we will see the markets get a lot of money pumped into them. But you take a look at IBM, it doesn't bode well. It doesn't bode all that well. And granted, IBM's kind of its own story here. But there are those fears, and it's something that I think the market is going to be watching very closely here next week. So going into the weekend here for the challenge in cash, we'll look to deploy that here. The next signal we get, we're getting a decent number of signals. I do expect the pace to continue at about this with earnings season. Haven't been able to trade the last 3 here, but as time goes on, as some of these stocks stop with the earnings, right? Even like a UAL. Which unfortunately didn't trigger today, right? It had its, was it Delta? My apologies here. Yeah, Delta, didn't trigger here today, but it's had its earnings. Those are behind it. Any new triggers, we're not going to have an issue from an option standpoint there. Again, thanks for hopping on. Have yourselves a fantastic weekend, and we'll talk to you Monday. Take care.